Theory. In the fourth tenet, Charles Dow has told that the averages should conform to each other. Now, what are averages? We have explained earlier also. By averages, here we mean the indices. Like if we are talking about USA, the major indices like the Dow Jones, the S&P 500 and the Nasdaq. So all these indices should be moving synchronously. Suppose we find that when we are looking at the indices differently, that they are in an uptrend and they are making higher high and higher lows. Now the uptrend is confirmed. Now we find in one of the indices the higher high and higher low pattern is broken. We find a lower high, but the other two indices are making higher highs and higher lows. But as we can see that the third index is not showing that pattern, that is a cause of worry, and someone should take caution that the up move may be towards the end. Similarly, in the case of a downtrend, if there are three indices and if we find that when the indices are making lower lows and lower highs, we are in a downtrend. But if suddenly one of the index actually fails to make a lower low, it makes a higher low actually, then it would be the reason for worry that the downtrend which is undergoing may be at the end or towards the end. So a trader or an investor should take caution on that. In Indian context, when we are talking about the major indices, it is normally the Nifty. When we are talking about the NSE, the Nifty, the sectoral indices like Bank Nifty, and again it can be Mid Cap 50. So ideally, when we are talking about the averages should confirm, so we should have a scenario when all these indices should be making higher highs and higher lows together or in a synchronous way. Let us look at the example here in the case of Nifty, the Bank Nifty and NSE Midcap 50. Let us look at the charts right now. Here we have plotted the charts in the investing.com platform. Here you are looking at the Nifty 50 daily chart. Then we are having the Nifty Bank daily chart, and then we are having the Nifty Midcap 50 chart. Now these are three important averages in the context of Indian market. Now if we are looking at 2016, end of 2016, we could see that in the Nifty, the low that was formed towards the end of the 2016 was similar to the low of the previous low. But if we are looking at the Bank Nifty, the previous low was actually breached and a new low was formed. But if we are looking at the Mid-Cap 50, yeah, this was a little bit lower low, but for all practical purpose, this low was similar to the level of the previous low. So the Bank Nifty was indicating the continued down move. But if we are looking at the Nifty or the Mid-Cap 50, we could understand that a new low is not being formed. So it was a reason to be cautious for a trader or an investor who was selling, and see what happened after that. The Nifty had started a up move which continued for so long, for more than a year. In the Bank Nifty also we can see that such an up move continued after that, and in Mid-Cap 50 also we can see that such an up move continued. So when all these averages don't actually converge or move synchronously, then we can understand that there is a reason to be cautious. Now look at this up move. During this entire up move, we can see that Nifty forming higher high and higher lows. Now similarly, the Bank Nifty was forming higher high and higher low, except this one where it just breached a little bit on the downside, but otherwise it was forming higher high and higher lows. And if we are looking at the mid cap 50, it was also having the same pattern. So it was an uptrend, but see what happened towards the beginning of 2018. What we can see that this mid cap 50 started correcting, and after around 10th it started correcting, and by the end of January it was quite lower. But let us look at the Nifty and Bank Nifty there. Here see that Nifty was moving up and up and up when the mid cap was coming down and down and down. Again, when we are looking at the Bank Nifty, we could see that Bank Nifty was also moving in tandem with the Nifty till the end of January. But here the mid cap index was selling. So all those averages were not converging or moving synchronously. See what followed after that. As soon as the start of February was there, the Nifty, Bank Nifty and the mid cap index all fell quite sharply. So Nifty and Bank Nifty were quite late to react to the downside move, but eventually they gave in. So after a sustained move where all those index or indices were moving synchronously, if we see a divergence in any particular index, there is a reason to be cautious. And that's why when Dow tells that the averages should converge, we should